Welcome to SIRA Past Papers YouTube channel. Today we discuss Advanced Level A-Level Accounting Paper 2025 Company Question. This is the additional information. This is the second part. I read the question properly. Look here. Janaka PLC is a manufacturing company. Okay. They produce some product and sell it. Okay. Manufacturing company means they produce some product. Okay. Look here. Manufacturing company that produces a single product. Okay. Single product. The company was incorporated on, look here, incorporated means started. Okay. Incorporated means started. Started on 1st April 2024. Look here, this is the opening date of the company, 1st April 2024. Our current year is, what is that? 31st March 2025. Look here, there is a current year. What is the current year? Current year ended in 31st March 2025. Okay, which date they started 1st of April 2024. This is the opening date. This is the opening date of the current period and the opening date of the company. At that time, you can think about that there is an opening date. There is no past situations, past events in this company. Why? The commencement date of this company is this opening date. There is no opening balances. Why? The opening balances means the current year. Opening balances means there is a past remaining balances. There is no past this company. Therefore, there is no opening inventory, opening stated capital, and there is no opening balances. Therefore, you must think about that. Don't find the opening inventory, opening some retained earning, opening stated capital. Don't find that opening balances. All are related to closing balances. Okay, let's see the question. There's no opening balances. Okay, next, the draft income statement of the company for the year ending 31st March 2025 is given below. Draft income statement means they already calculated income statement. Draft means this is error, this is the wrong income statement. Look here, income statement, draft income statement for the end in 31st March 2025. Look here, sales revenue, cost of sales, after the minus, then gross profit plus other income minus operating expenses 32,500. Profit after tax is 24,000. Okay, let's see the summarized trial balance. This is the trial balance. No, we want trial balance as at 31st March 2025 after preparing the draft income statement. Look here, they supply us trial balance. What is the trial balance? After preparing draft income statement. After preparation of draft income statement, they prepared trial balance. At that time, you can think draft income statement is already calculated. The final result of the draft the income statement is 24,000. 24,000 must be final result of income statement. After the calculating this final result, they prepared trial balance. We can see the 24,000 final result in trial balance. Look here, there is a 24,000 profit after tax. 24,000 is in the trial balance. Therefore, you can think about that. Look here, there is a trial balance. No, this is the bucket of trial balance. There are so many items in the trial balance. In that time, you can think there is a one bucket is profit after tax. Profit after tax 24,000. Okay, this is included in 24,000 profit after tax. In that time, profit after tax included so many items. What are they? Look here. What are they? What are the ingredients of income statement? You know, these income statement are included sales revenue, cost of sales, all income statement related items in the bucket included these items. Income statement included these items. Therefore, you can think about that these profit after tax, profit after tax bucket. Okay, profit after tax bucket included what are they? The sales revenue and income statements item. Okay, this included income statement item. Income statement items. All income statement items are included in profit after tax. Profit after tax included in the trial balance. Subtopic of trial balance. The profit after tax included income statement items. There are sales revenue and other operating expenses, cost of sales are included in this profit after tax. Okay, let's see. There are so many items there, the trial balance. Next one, this is the additional information. Look here. Before preparing the final set of financial statement for the year ending 31st March 2024, the following information should be taken into consideration. We must be consider the additional information. Look here. The composition of the operating expense. Composition means ingredients. Okay, ingredients of operating expenses used in the preparation of draft income statement is as follows. Look here. There is a composition of operating expenses. There is operating expenses there. What are they? Administration expense, distribution cost, depreciation of manufacturing plant, depreciation of office equipment, factory building rent, income tax paid under self-assessment. The total operating expenses included these items. The total is 32,500. 32,500 is included in draft income statement. Draft income statement is there. Look here. 32,500 is the operating expense. These 32,500. The expansion of 32,500 is there. This is operating expense. We can get item by item to preparation of financial statement. Therefore, look here. They said several expenses items including some. Look here. Several expenses items including some manufacturing expenses have been erroneously included in the above operating expenses. Operating expenses mean distribution cost or administration cost. No, at that time they said several expenses items including some manufacturing expenses have been erroneously included in the above operating expenses. These operating expenses included manufacturing expenses. What are they? Look here. Depreciation of manufacturing plant. The depreciation of manufacturing plant is related to manufacturing. No? Therefore, we must find the manufacturing cost. This cost is related to manufacturing cost. Other factory building rent and other some expenses are related to not the operating expenses. This is related to manufacturing cost. Okay, at that time the first additional information. Look here. The inventory shown in the trial balance has been ascertained, calculated based on the manufacturing cost erroneously calculated in the preparation of draft income statement due to the non-inclusion in some manufacturing expenses. Look here, the inventory shown in the trial balance. Look here, there is a trial balance is there. There is an inventory. Look here, inventory finished goods. Which of the value? Value is 10,000. 10,000. This is information is 10,000. Okay, they said inventory shown in the trial balance has been ascertained, identified based on the manufacturing cost erroneously. That's wrong. Calculated in the preparation of draft income statement due to the non-inclusion. There is no inclusion of some manufacturing expenses. There's a critical one. Why I said that? Look here. You know, this is a business. This is a business. They are manufactured some items. This is a manufacturing. I said factory. No, I said factory. Okay, factory. I said factory. This is the production process carry out. Other section is the administration. This is a shop, selling shop. This is the administration section. Okay, at that time the factory must be prepared, must be calculated production cost. Why? Think about our goods is fish buns. Okay, fish buns. At that time the fish buns produced in the factory and the cost of the fish buns was calculated in the factory. Therefore at the factory they prepared production cost of fish buns. Okay, therefore they prepared production cost. Okay, they prepared production cost in the factory. At that time there's a final result was calculated. This is the total cost of production. The production cost, the total production cost. This is total production cost. Okay, after the fish buns, the completed fish buns was created, they are transferred to administration section to sell. Therefore at the administration section means the trade business. No, the selling section must be create. What is that? Cost of sale. They prepared income statement. No, they prepared income statement. Okay, income statement. At that time they calculate which one? They calculate sales. They minus cost of sales. At that time they sales fish buns. Okay, they sales fish bun. At that time cost of these fish buns is production cost. Okay, cost of sale was calculated after transferring this. You know, there's opening finished goods. Finished goods. There is no opening inventory. Why? This opening in the current year. No, therefore there is no opening inventory. After that there is no purchases outside the business. Therefore they produce the production in the company. Therefore production cost, total production cost of fish buns transfer to these cost of sale to sell the fish buns. Okay, therefore I write that. What is that? Total manufacturing cost. Manufacturing cost. After that, this transfer the manufacturing cost. I write for an example. No? There is 1,000. No? There is 1,000 was calculated. The finished goods, finished fish buns production cost transferred to the manufacturing cost. Cost of sale. The cost of sale incurred 1,001. At this manufacturing cost transferred to the cost of sale. Cost of sale means cost of selling items. At that time, after transferring this production manufacturing cost, there is no sales in this. You can think there are some items should be sold, but some items remaining. Look here, there is a total fish bun cost 1,000. After the transferring to the selling section, there is some items, the part of that can be sold. The part of that must be remaining in closing balance. Therefore, at that time, the total manufacturing cost is a total manufacturing cost. I divide in 2. Okay, total manufacturing cost. Manufacturing cost. I divide in two items. What are they? There is a occurrence. What is that? Some items should be sold. Okay, some items should be sold. Items. There is some items of these fish buns not sold. These are the unsold items. Unsold items. Unsold items. Therefore, these 1,000 of total manufacturing cost, some are sold items. The sold item means cost of sales. The cost is there. This is a cost of fish buns. The some items are sold. These sold items, cost of sold items are, we identified cost of sales. Okay, the total manufacturing cost go the two ways. What are that? Some items are sold, these are remaining in the cost of sale. Some items are unsold at the end of the year. This is the closing inventory. Why you deducting from closing inventory to separate it? Look here, closing finished goods. Look here, closing finished goods items are 200. No, I deduct from these manufacturing cost 200. What is the final answer? 800. 800 is what is the answer? Cost of sales are 800. Okay, at that time, at the calculation, we must easily identify total manufacturing cost. Divide in 2. There are 2 sections and 2 houses are created based on the manufacturing cost. What is that? The part of manufacturing cost should be identified as cost of sale. Part of that are closing inventory. At that time, there is a correct manufacturing cost was calculated in the manufacturing business. After that, correct cost of sale was calculated. Correct closing inventory was calculated. But the total manufacturing costs are wrong. What is the result? These two are incorrect. Firstly, total manufacturing cost of fish buns are wrong. After that, the separate sections are we can clearly are wrong. Why? The section of manufacturing cost of sale should be wrong by total one is wrong. Based on that, this cost of sale is wrong. At that time, the closing inventory, total part of the manufacturing cost start closing inventory, no? Therefore closing inventory is wrong. Therefore, at the preparation of financial statement, there is a erroneous about the total manufacturing cost. You should be adjusting two types of items. What are they? Cost of sale should be adjusted. You should be adjusting, and closing inventory should be adjusted. Okay. Therefore, this is they said that inventory shown in the trial balance ascertain identified calculated based on manufacturing cost. Based on manufacturing cost, closing inventory was calculated based on manufacturing cost. Therefore, look here, manufacturing cost erroneously. Okay, there's error of manufacturing cost. Closing inventory should be error, wrong. Okay, calculated in the preparation of draft income statement due to the non-inclusion of some manufacturing expenses. Therefore, there is a manufacturing cost must be error, wrong. Therefore, closing inventory and cost of sales must be error. Therefore, look here, the cost of finished goods inventory is equal to 1 to 5 of manufacturing cost. Look here, the cost of finished goods is a closing inventory. Cost of finished goods of inventory means closing inventory is equal to 1 to 5. Okay, 1 in 5 of manufacturing cost. Okay, look here, there is a cost of closing inventory was, we can identify 10,000. 10,000. Therefore, I write actual figures. Okay, look here, I can write there is actual figures. Actual figures. What are the actual figures? Closing inventory was 10,000. Closing inventory was 10,000. Okay, they said that they said that finished goods inventory is equal to 1/5 of 1/5 of manufacturing cost. They said 1/5 of manufacturing cost. There is a 5 of manufacturing cost, 1 is closing inventory. Look here, 1/5 of means they said 1/5 of this is manufacturing cost, 1/5 of. Look here, 5 is what is that? Manufacturing cost. Manufacturing cost is 5. One part 1 was closing inventory. Okay, therefore you can think that there's a 5 is total. The part of this 5 was 1. The remaining is 4. 4 is cost of sale. Look here, 4 plus 1 was 5. Okay, let's see, you can think about that. The 5 is, the part 1 was 10,000 actual figure. The 5 parts are 50,000. What is the cost of sale value? 4, item 4. Therefore, we can think about that cost of sales are 40,000. We can confirm that. Look here, what is the cost of sale? Look here, cost of sale is there. Here, cost of sales. Look here, cost of sales 40,000. Look here, cost of sale are 40,000 is equal to this one. Okay, therefore the manufacturing cost are 5 items. 1 is closing inventory 10,000 and cost of sales are 40,000. Therefore, at the calculations, you must be adjust to cost of sales and closing inventory. Why? The total manufacturing costs are separately identified. cost of sales are in the accounts, 10,000 are in the accounts, as accounts are running these 40,000 and these 10,000, therefore not 50,000. Therefore you must adjust cost of sales and closing inventory. Therefore I go to our answer sheet. What is that? Answer sheet. I go to answer sheet. Look here, our answer sheet. There is a structure now. I prepared already prepared note about cost of sales. Cost of sales. Look here. Therefore they already calculated cost of sale in the accounts. You see, therefore I write balance of this cost of sale in color. Okay, this is balance what is the balance? 40,000. Another note should be created to closing inventory. Therefore I create this one. Okay, this side closing inventory. There is a closing inventory. There is so many closing inventory, therefore I identify finished goods. Okay, closing finished goods. What is the current balance? Is within bracket I write 10,000. There is a manufacturing cost is 50,000, but already accounting is running as 10,000 is a closing inventory finished goods and 40,000 in the cost of sale. Okay, at the calculation there must be adjustment to the manufacturing cost. At that time manufacturing cost is, there are two locations, one is cost of sale, the second one is closing inventory, 10,000 and 40,000. Therefore we must read the question immediately. Look here, what is the question said? Question said that look here, these are the clear. Okay, 1/5 of manufacturing cost are closing inventory, 1/4 of 5 is cost of sale. Okay, next one, there were no raw material or no work in progress inventory as at 31st March 2025. Okay, 2025 means closing. There is no raw materials in closing and no work in progress inventory as at 31st March 2025. This is the explanation of the manufacture. This is the adjustment number 2. You must think about that. There's a manufacturing cost should be identified. Based on that, manufacturing costs are separated two locations. What are the locations? Closing inventory 10,000 is there. These are the separate item. The cost of sales are incurred 40,000. At the preparation of manufacturing cost, in next adjustments you must be adjust to manufacturing cost. No, you adjust to manufacturing cost is two locations. No, closing inventory and cost of sales. Therefore in next adjustment there is a not related to inventory. This is direct fee adjustment. There is adjustment number 3. In next video we meet adjustment number 3.